Hey, happy Monday, everybody. Paulo Brantz with This Week in Interest Rates. Hope you had a fabulous weekend. I can't believe it's Monday already, but yet here we are. And by the way, we're starting the week off. This is good news here, floating, which means given what we know right now, there's a better chance that rates are going to decline versus go up. But one thing that the market is going to keep an eye on is what's going on in Iran. Now, so far, we've had no impact in terms of the market. So be mindful, this update is regarding to interest rates. So I'm trying to be as interest rate focused as possible. But those are the things that can definitely impact the bond market, the stock market. And so as you're out there shopping for homes, you want to be mindful that any switch or any words used by anybody could change the market trajectory. That's why you have to work with someone like me, because we're going to keep you updated here. So hey, let's take a peek back at last week, the housing market update. The data came out better than expected. Now, keep in mind, these are home sales that closed in May. They're up 0.8% month over month. The median housing price rose to $422. Now, keep in mind, this does not measure appreciation. The median home price basically states that half the house is sold below 422, the other half sold above 422. So that's all that means. However, this week you're going to find out some appreciation data is going to come out, and I'll let you know when that does. Inventory is up 20% year over year. 28% of homes sold over list price. Look, this is the advantage in today's market. If you are looking to buy a house and waiting for interest rates to come down, you could be missing on a very strong strategy that's going to help you and your family save money. I hear this a lot. Boy, do I wish rates were 3%. Well, I get it, right? I want rates to be 3%. But one thing we always forget, when rates were 3%, when there was a house for sale, let's say $700,000, you couldn't come in and say, hey, $650, but you have to pay $20,000 in closing costs. It was the exact opposite, actually. You had to, bid $100,000 over, and you had to waive all your contingencies. I mean, you had no say. So each market really has its advantages. And what smart buyers are doing right now is they're seeing what this market is. They're taking advantage of it. And those that bought most likely are going to win big, especially if you got your closing costs paid for. And if interest rates go down as they're projected to do, you're going to be able to refinance and lock in that lower price. Because, once rates go down, we have the data to prove it, more buyers go out there to buy houses. So don't sit on the sidelines here. First-time home buyers made up 30% of the sales. Distressed sales, people want to, distressed sales are still low at 3%. Now, keep in mind, when a bank sells a house, that's a distressed sale. They're not going to give it away cheap. They are going to put it on the market to get as much money as they can. And a lot of people, I shouldn't say a lot, a few people are out there waiting for distressed sales. With the idea, I would imagine, of getting a deal, you're still going to pay fair market value for that distressed sale, unless, of course, you go to the court steps, pay all cash on a house you've never seen, and just fingers crossed that everything is okay. All right, key reports this week. Tomorrow, home price index comes out. That is a measurement of appreciation. Tuesday and Wednesday, Fed Chair Powell testifies. This is going to be a market moving both pros and cons for interest rates. Thursday's jobless claims. And then Friday, we have PCE inflation, which is, inflation is the kryptonite for 30-year fixed rates. If there's an upward pressure of inflation, we can see interest rates spike up. If we have positive news regarding inflation, we can see interest rates go down. So, hey, if we're not working together, we really should. So there's a QR code. I'm going to try this. I think it's right there. There's a QR code right there. Click it. It's for a hopes and dreams. Hey, no application, no credit pulls, nothing. Just me and you talking strategy, you utilizing my 20 plus years of experience in this magnificent industry of loans. We're going to take great care of you. And by the way, if you need a realtor recommendation, we work with the best, and I got you covered. Let me know. Paulo Brantz, Clear to